So whenever we're talking about swing trading, normally we're talking about taking trades on the daily, maybe 4-hour chart, and possibly all the way down the 1-hour chart. But there are a few times that we actually use the weekly chart to our advantage during swing trading, and that is unfortunate because this is something that can really add some accuracy to our trades, and that can inevitably lead to more profitable trades with a better winning percentage. And in today's video, I'm going to show you guys exactly how to use those weekly charts in order to predict good trading opportunities. Welcome to the trading channel. If you're new here and you're trying to learn how to trade Forex, maybe you're trying to become profitable, then make sure you go ahead and click that subscribe button and join our email list to be alerted whenever we come out with new videos like this, and also to be alerted when we come out with weekly market prediction videos every single Monday. Click that like button for me while the intro and disclaimer roll, and I'll see you guys on the other side. Welcome back, traders. So we're going to go ahead and open up a live trade here on the pound Aussie. We're going to buy 2 positions here at the same exact price. And now that we're already in the trade, I'm actually going to talk you guys through why we were interested in this as a trading opportunity. Obviously, it has to do with the weekly chart because of the title of this video and what we discussed before the intro and disclaimer. But first off, let's talk about some of the other reasons that we were interested in this as a trading opportunity. Right now, we're on the 4-hour chart, and obviously, this is a daily level of structure, but also obviously, if you're a trend trader, you wouldn't really be looking at this as a probable opportunity to trade. If you're a trend trader, then you're looking at this as a downtrend for sure. Right now, we have a market that's moving down, creating lower lows, lower highs, lower lows, lower highs, and then continuing in that trend. So looking for a long opportunity from this area as a trend trader may not be a great decision. But let me tell you why it's a great idea to look for a counter trend opportunity here. Just for starters, we have some Fibonacci Confluence in this area around 1.7142. That Fibonacci Confluence looks like this. If we take a Fibonacci extension from our swing high down to our swing low here and back up in, you can see that we get a 127 right where the market turned around. Next up, we're going to take from our previous swing high here, our most previous swing high, come down to that swing low and pull it back in, and you can see that we have a 1414 lining up with that 127. So there's some Fibonacci Confluence. Whenever there's multiple Fibonacci levels landing in one spot, it can add to the accuracy of a trade. Not only that, of course, we still have this daily level of structure. This is a daily level of major structure that's been tested multiple times in the past as structure support and resistance, meaning that the market could absolutely respect this level once more, and it actually has a pretty good chance of doing so. Also, if we look here at the chart, we have an A to B, C. If I clone that leg there, you can see the D point of that pattern coming in right where the market turned around. So we have one A, B, C, D pattern. And also, there's another A, B, C, D pattern, a smaller one. I'll change the color of this one to make it easier to see right here. We have A, B, up to our swing high, and then if we clone this first leg, you can see that we actually have another ABCD pattern, a smaller one right there coming in exactly where the market turned around. So already a lot of different conditions to make us see this as a good trading opportunity. Now on top of that, I told you that we were going to take a look at why this could be a possible trend continuation trade and why trend continuation traders may not be scared of this opportunity and may want to consider an opportunity like this in the future. The reason is because, yes, on the 4-hour chart, we are definitely in a downtrend, as you can see. Zooming out to the daily chart, yes, we have pushed down and now started into a downtrend here as well. Here on the daily chart, you can see these previous levels of structure that the market used around this level. But the important thing about this video, and the important thing I want to show you guys in this video, is how to use the weekly chart in order to swing trade. So we very seldom look out at the weekly chart. But what you could do in a situation like this, if you were a trader that only considered trend continuation trades, is say, okay, I know we're in a downtrend on the 4-hour. I know we're in somewhat of a downtrend on the daily. What does this mean on the weekly chart? Okay, so here things are changing a little bit, right? Here on the weekly chart, we just broke out of a period of consolidation. That period of consolidation looked something like this. We had a high here and these lows right here, and the market ended up pushing up, creating a high, creating a low, and then breaking above our period of consolidation. Now that is extremely important. The reason that's important is because now on the weekly chart, we are considered in an uptrend. So would it be a good idea for a trend continuation trader to take a trade at this level? Well, considering we have a newly found uptrend, our 1, 2, 3 move right here, plus breaking out of this period of consolidation, and then this is the pullback that's coming into major structure out on the weekly chart. What that actually means is we have an opportunity for some major gains out of this pair. If this uptrend on the weekly chart continues, as a market often does after breaking out of a period of consolidation to the upside, then that would mean that a trade from this level would give us a potential reward, would give us a potential stop loss that looks something like this, and a potential reward that looks something like this. So if this market does continue in our upward direction that we just found in the weekly chart here, then we could quite possibly see a pullback into this zone followed by another extension up. And that's how we can use that weekly chart during our swing trading as another rule of confluence, as another condition we can add to our trading. If we're in a downtrend on every other time frame, but on the weekly chart we've just started into an uptrend, and this is the pullback, although it looks like a downtrend on the daily and it looks like a downtrend on the 4-hour, in actuality out here on the weekly chart, this is a likely place that the market could turn around and start going up. Alright guys, so I'll go ahead and pause the video and then we'll take a look at this trade later on and see how it played out. And one more thing that I forgot to mention, guys, is that this market combining all of those conditions as well as being in an oversold condition on the RSI here on the 4-hour chart. So that's just one more thing to add to our reasoning behind placing this trade. I'll go ahead and pause the video now and we'll let this play out. Back here on the Pound Aussie, after pausing the video for about 10 to 12 hours, we've now ended up coming all the way up and hitting first targets at a 1-to-1 risk reward. We're going to go ahead and sell half of our position here. We just got that done. Now what we're going to do is move a stop loss up to break even and just manage this position up to our next daily level of structure. But that is a long ways away, so I'll keep you guys updated as this trade plays out. Okay, traders, so the Pound Aussie made it up to that next daily level of structure that we were looking at for profit targets and ended up banking in a little over 400 pips getting to that level. So that's how we use weekly charts to predict great counter trend levels. And let's do a quick recap. So what we're actually doing is no matter what trend we're in on a lower time frame, for instance here on the Pound Aussie here on the 4-hour chart, this looks like a downtrend, right? We have a market creating lows and highs that are lower than previous highs, lower lows, lower highs, lower lows. Although this is what it looks like on a 4-hour chart, taking it out to the weekly chart, all this big move down is a pullback on a weekly uptrend. And I hope that makes sense. So what we're actually looking for, if we're going to be using the weekly chart in order to find counter trend levels, is looking for a weekly chart that is in an uptrend or is just broken out of a period of consolidation, and this pullback that is still in trend. I'm talking about this one right here that we're drawing out. That pullback that's still in trend on a weekly chart is going to look something like this on a 4-hour time frame. It's not going to look like a regular pullback. It's going to look like a downtrend on a 4-hour time frame, and it could look like a downtrend even on a daily chart. But that's why we're using those weekly charts to spot out very accurate counter trend levels and accurate counter trend trades when it comes to our trading time frame, because although it may be a counter trend trade just as this was on our trading time frame like the 4-hour, it is still a trend continuation trade on that high time frame on the weekly chart. Guys, if you're struggling in your trading and you'd like to know more of the techniques and conditions along with the entry reasons that we actually use in order to place trades just like this one, then feel free to check out the EAP Training Program, which comes with a full training course on the strategies we use along with the entry reasons and conditions we use for those strategies. Also, along with that, you'll receive 3 to 5 alerts per week on trades that I'm placing based on similar analysis to what you learned in this video. And also, we produce a review video at the end of each week showing you guys the drawdowns we're going through and plus the new equity highs that we hit based on the emails we send out. And full disclosure, those emails are not meant as a signal service, but more so meant to teach you how we see the market in a better way based on the strategies you learned in the training course. So if you're interested in learning more about that, then the link for the EAP training program is in the description. And if not, then that's okay too. I hope you got value out of this video. If you did, don't forget to hit that subscribe button and the notification bell so that you're alerted next time we come out with content like this, along with our weekly market predictions that we come out with each and every Monday, talking about trades we're paying attention to for the upcoming week. There's also a link in the description for the Advanced Pattern Mastery course. If you're interested in advanced patterns and want to learn more about that, just click that link Otherwise, I wish you the best of luck in your trading, and I'll catch you guys in the next video.